Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. Today is July 22nd. I'm host Richard Bernoulli. We have returning guests Daniel Lacalle and Ira Harris. Daniel holds a PhD in economics and is chief economist at Tressis SV and has been ranked in the top 20 most influent economists in the world. He is author of several books, including most recently Escape from Central Bank Trap and Freedom or Equality. And Ira is independent trader, hedge fund manager, global macro consultant, trading foreign currencies, equities, bonds, and commodities for over 40 years. He was also CME director from 1997 to 2003 and a stint most recently. Welcome, gentlemen.
Thank you. Thank you.
Thank you very much.
Great. We thought we'd begin, Daniel, with your global macro view on the economy and the financial markets.
Okay, very briefly, I think that what we are seeing right now is that the global economy is moving into a slower expansion, but still no signs of recession. The Chinese economy is going to deliver the 5% that the government has demanded, as they always do. So that's not a problem. But India is growing strongly. The United States second quarter is likely to be also relatively supportive of decent levels of growth. But in the euro area, this is no news to anyone, is not growing. Okay, so that is almost like it's almost like old story. But what continues to be an issue is inflation. No, although inflation is coming down in most economies, global inflation is very, very elevated, and particularly in non-replaceable goods and services. No, if we avoid talking about the Chinese levels of inflation, which can always be debated, and they're very low, in almost in every other nation, what we have is a significant problem of continuous rise in prices of non-replaceable goods and services. In terms of unemployment, it's a very interesting recent report from the OECD that said that yes, unemployment rates are actually quite low, but at the same time, labor participation rates and the number of working hours are coming down. No? So those things, all of them basically tell you that the economy is not bad, but it's not good, if you know what I mean. And this happening in an environment of persistent inflation continues to ring the bell of the risk of stagflation.
Mm-hmm. Yeah, very interesting. Good points. Your thoughts, Ira?
Well, these are really a good jumping off point. I think China, and we saw them cut rates 10 basis points overnight, whatever, after the plenum. But I think one of the things that came out, and I think this was brought up by or brought out in the writing of Robert Wu. I hope I have his name right. Who's been? I think it was Louis Gavay who directed me, because I never read him, but I think that point became the point that he raised a few weeks ago, became part of it, which is how to get revenue into the local governments, to get the local governments spending, because the local governments have been a drag on the Chinese economy. And believe me, I'm no China expert. I turn to Michael Pettis and others whose work I have a lot of respect for, but that element of lifting consumption, I mean, this is definitely part of the Chinese problem, and Pettis has written about it for so long. And it's interesting that they do think that they can, through higher consumption taxes, get more money to the local governments and away from Beijing per se, because that's not what the problem is. So that will be interesting. We're not seeing it though. The drag on from China seems to be picking up again. All we do is have to look at copper prices, right? Copper is really stagnating. So we do know is Danielle Daniel has talked about. And Europe is really a drag. And I hope we'll get more into Europe. What will lift Europe out? It's not cutting rates, not in my opinion. And hopefully we'll also get into, because we have a Fed meeting next week, and I do have some views on that. So we'll pick up from there. But the global economy is, it's moving along. But I think, and hopefully we'll get into that the employment data in the U.S. is softening, and maybe softening a little quicker than especially the politicians may like. So will that play into that? So we'll go from there.
Mm-hmm. And yeah, speaking of politicians in Europe and China, what are your thoughts, Daniel, on the European sanctions on China? Like what does it cover? What are the implications to the economy and the financial markets?
I think that the European Union should really stop and think, no? Because the European Union seems to be throwing sticks at its own backyard. And, sanctions against China basically mean that electric vehicles in Europe are going to be more expensive, nothing else, no? You're going to put 25% tariffs on Chinese electric vehicles. Your electric vehicle bought in Germany is going to cost 25% more if they transfer the entire thing. It's not going to do anything to the competitiveness of the Chinese industry. The problem of the European Union is that with its green policy, or so-called green policy, because it ended also boomerang with the boomerang effect of more coal consumption, has ended up basically giving to China its industrial path to get out of the real estate challenge. It's interesting because the European Union decided to ban combustion engine vehicles before it even had the ability to compete globally in terms of electric vehicles. So it basically gave the biggest Christmas present to China possible, which is we're going to create something that is a policy-driven strategy that will obliterate the automotive industry in Germany and give you the entire business to you, China, to offset the negatives of the real estate challenges that they're suffering. So as Ira was saying, right now, the regions in China are unable to get the revenues that would be needed in order to secure higher levels of expenditure and social elements, etc., because the real estate source of tax revenues, which was in most of the provinces the largest tax source for tax collection source for governments, has basically dried up. But it's going to be coming from the electric vehicle and the green policies of other countries. So I don't think that the tariffs are going to work the same way that the sanctions and the limitations on Russian gas ended up backfiring on Germany and most of the Euro area countries.
Yeah, exactly. Go ahead, Ira.
Yeah, I think Daniel brings that's 100% right. Again, I think Daniel and I talked about it when these sanctions long ago, that, yeah, they look great on paper, and yeah, we can move numbers around on a spreadsheet, but bottom line is has no impact. It's drawn Russia, Iran, China closer together because, again, oil is, well, of course, there's different grades of oils, but for the most part, you can make oil fungible, especially Russian crude. It can be met and used. And we saw the Indians buying wholesale prices, the Chinese, and the Indians were busy refining it and shipping it all over the place. And why not? So the world is not static. And that's what Daniel's point is. It doesn't wait for you. You can sanction all you want, but what is China doing? They're dumping electric vehicles into Africa. So they're going to pick up the global south. China is making huge inroads into the global south, and you can admonish them all you want. But that's an admonishment of arrogance, because, again, as the Chinese are quick to say, yes, you want a rules-based global order, and the Chinese are quick to go, whose rules? And you can't get away from that because it's always whose rules. That doesn't mean that I'm in favor of a world of, a Hobbesian world of, might makes right. I'm not saying that. But to think that your way is always the correct way, wrong. And that's where I think that's a great jumping off, because that takes us a lot of places. But I think Europe has made one mistake after another. And of course, we'll go back to Frau Merkel and turning off the
nuclear.
The nukes. But of course, that was all put in place by His Eminence Gerhard Schroeder, who wound up making a nice living working for Gazprom. But that's another story.
But here's an interesting thing about that this is why it's so dangerous to let politicians decide on a path, because they will follow the path even if it leads everyone to destruction. So Schroeder comes in and starts the decommissioning of the nuclear fleet of Germany. And, we can say loads of things about it. Merkel continues. But this is what I find, seriously deranged. So then Germany, a few years later, enters into the largest energy crisis in their history. They need to import natural gas from the United States at 10, 15 times the price of natural gas from Russia. Huge problem for the industry, huge problems for citizens that basically cannot even heat their homes. A huge energy crisis. So what does Mr. Scholz, and this is the third, so this is not Schroeder and this is not Merkel. What does Mr. Scholz do in the middle of the most challenging energy crisis in the past 4 decades of Germany? Shut down the remaining nuclear plants. That's what they did. You cannot make this up. You have basically Germany running on more coal because of the energy, because of the energy crisis. You have a few kilometers away from the border 56 nuclear reactors in France, and at least you still have a few nuclear terminals providing baseload, cheap, affordable energy. And what does the newly appointed Prime Minister of Germany from a different party, socialist, decide to do? Shut down the remaining ones. This is incredible, because this is what shows why it's so dangerous when governments decide this is the path, is that they will lead you down that path, even if it leads to destruction.
Yeah, absolutely. Insanity. And related to the sanctions, what do you have any thoughts on, like, confiscation of Russia assets, whether it be the bonds capital or the yield distribution from the bonds?
I don't know, Ira, if you have any particular view.
Well, I have I'm being that I was confiscated because I was long the RSX ETF that was issued by Van Dyke. Is that
Yeah.
Yes. So
yeah, the ETF.
So that has basically been confiscated at a remuneration of about 5 cents on the dollar. I want to know, because these were not bankrupted companies, I want to know how it was determined what the valuation of these were. So I've written 3 letters to the SEC and actually to Van Eck. That's what I'm talking about, Van Eck funds. I've gotten no real response that satisfies me, and I would be satisfied. And then I also own, prior to the invasion, I owned RSX, and I also owned Moscow Energy Company, which symbol was AOMOY. Now I think they changed it. Now I don't get any dividends, and it would be better if Russia paid dividends, because they'd be depleting them of capital. So I don't understand, better to force them into that game. So I don't know what will happen with that. So I have a bone to pick, because I have a dog in this fight. because I was confiscated. My wealth was confiscated. I'm a private global investor. And who was it that confiscated my wealth? All in the name of what? Nobody
I
asked me.
think
I
that
never voted on this any way, shape, or form. And you know what? I, you know, I, I've studied international affairs, global, so I'm not naive about this. But this whole thing was so badly thought out, and I'm hoping that they reach a ceasefire. And it puts me in a camp with people who I have no respect for, but I think that there's some sense to it. Again, from the beginning, Putin's not going to lose. And even if he, and I was terrified of the use of tactical battlefield nuclear weapons, because Putin is not going to lose. And those who don't fear it, I think, are very naive. But again, what strength did Putin have? All you do is take out a map and look at the supply lines. And when you have those types of short supply lines versus the supply lines to supply the Ukraine, Russia has an inherent, they have a home field advantage. And that has resulted in a meat grinder just grinding up Ukrainian lives as well as Russian lives and anybody else who's caught in. So where does it go? It doesn't mean I believe in a world where might makes right, but you got to sit down and negotiate things that should have been negotiated beforehand. Why did this get out of hand? And I saw, and Daniel, I'm sorry to go to this route, but we may as well bring it up because somebody wrote about it today, but I blogged about it at the beginning of this, that my fear was that this was going to turn into the Spanish Civil War, in which everybody was going to use Ukraine as the killing fields to try their most modern weapons. And that's exactly what's going on. I blogged about it in 2022 that this was going to be the Spanish Civil War. And the Spanish Civil War was such a horrendous period of European history, especially Spanish history. And here we are redoing it again as everybody's just trying out their newest technology.
That is a very good point. I think that you brought home one of the most important points of an open financial market, is that the best way, if you really, really want to bring down or to make the world understand that the level of risk in securities and in a country is way too high, it's an open market. By imposing sanctions like the ones that you have mentioned and stopping the flow of dividends, what you have done is two things. On the one hand, you are penalizing global investors that have nothing to do with the conflict. Number two, you are also disguising the reality of the risks facing the country that you're supposed to sanction. Right now, there is a widespread view all over the world that Russia is doing phenomenally, and that the 2 or 3 things that are not going well are because of the sanctions. So you're basically not solving the situation. And number 3 is that once you open the door to confiscation, even if it is in a war, etc., blah, 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 and the confiscation of everyone, not the confiscation of a dictator's wealth, not the confiscation of the assets of one individual, but confiscation of the assets. Once you do that, you are opening the door to the confiscation of any private property. It's not that, and people, sorry if I take a little bit too long on this one, because it worries me
good
immensely.
points. Yeah.
It worries me immensely. It's not the same to go grab the assets of Nicolás Maduro if he loses and he is out of the country, and use those assets to give back to the country because those were basically stolen, then to go to all of the owners of Venezuelan bonds, assets, etc., and confiscate them. Huge difference. And once we cross that line, we cross the line from penalizing the Nigerian dictator to penalizing Nigeria and the rest of the world.
Meet the Cedar Owl, a new economics and finance publication with a focus on environmentalism. We combine the Austrian School of Economics and market environmentalism principles for investing in a sustainable future. Follow the link in the description to get to know the Cedar Owl better, understand our values, our mission, exactly where we're coming from, and the type of content that we release on a cyclical basis every Thursday. Join us in targeting outperforming portfolio returns while making a positive impact on society and the environment through technology. Subscribe now for weekly insights, investment articles, and exclusive content.
Yeah, those are great points. If we can shift to monetary policy in terms of what's happening with the Federal Reserve, European Central Bank, people are expecting rate cuts, and what are your thoughts under what scenarios that make sense or could happen or will happen from your view, Daniel?
Well, the European Central Bank made a big mistake by leading the path of rate cuts without any logic. Let's remember that the European Central Bank cut rates 10 minutes before increasing their estimates of inflation. This is in itself unbelievable, no? And obviously, because there is a perception that there's a false perception that the euro area is in stagnation due to high rates. Well, the euro area was in stagnation with negative rates. So no, that is not the reason. But negative nominal rates, by the way. I think that the problem of the European Central Bank is that they cut rates in order to disguise the bond yields of governments that are entering into very large fiscal imbalances. And then, as you do, you get French elections and everything jumps, no? So the entire alleged benefit of rate cuts was offset and more by the French elections showing that the French voters had the incredible luxury of deciding to vote between more debt, a lot more debt, or an insane amount of more debt. That was basically the choice that they had in terms of economic policy. And now the European Central Bank in September is going to cut rates likely again when in the euro area, the average inflation in the last figure is 2.6%, which is already above their target, and they've been missing their target for quite some time. But also it's important to understand that the euro area has a lot of countries. There are 9 countries in the euro area with inflation above 3%, including Spain. So basically, cutting rates is not likely to generate the kind of growth in financial credit, etc., that the ECB would like, and probably perpetuate a level of inflation that has not been reduced to the levels that we are used to in any shape or form.
Mm-hmm. Interesting. And your thoughts, Ira?
Well, so much. So let's go to the ECB and I, cut rates, not cut rates. First of all, the conversation and the questions that get asked by the journalists to me they're all about that with inflation. So should they cut? To me, that's not the paramount issue that the Europeans that are facing anyway. And it's interesting. I think it was, Daniel, at the May meeting or April meeting, when right after the press conference, what happened? The ECB, well, interestingly, at the meeting, Lagarde brought up the idea out of nowhere. It was in answer to a question, the first question that she took, that she brought up capital markets union, right?
Yeah.
Now I thought that was kind of interesting because it had nothing to do with the question, but she brought up CMU, capital markets union. And then later in the day after the press conference, the ECB released a paper on capital markets union.
Mm-hmm.
Now, before they start cutting interest rates, and I know it's a political thing, but it was interesting because in the FT today, there's a piece from, I forget what's about, hold on. I don't know whether you saw it. Let's see. got so much Biden, but there is a piece on Europe about the need really for capital markets union. You'll know who wrote it. I have to think about it. I'm trying to find. I'm sorry, I'm a touch distracted. Let's see, Europe, Trump trade. Oh, I can't. It's a piece. Oh, here. It's by Pascal Donahoe. You know who that, right?
Yeah.
And the title of the article is Europe's prosperity depends on solving its budgetary conundrum, which is all about a capital markets union.
Yeah.
And the interest rates in Europe are really an interesting thing. I mean, when you think that Italian 10 years yields are lower than US 10-year yields, Spanish 10-year yields are lower than US, Greek 10-year yields are lower than 10. That's all because of to me, and I don't know how you feel about it, but the use of the German credit card to guarantee, right? Yeah,
Absolutely.
So now you need, and Lagarde has been, and I think Lagarde, I don't think much of her in terms of economic history. I have a lot of respect for her as a politician. I think that's why she was brought into this job. So you're going to have to politically push through a capital markets union, or Europe's not going to go anywhere, and they're going to be saddled with the fare as Lagarde learned on her first week. Don't talk about fragmentation of yields, because you have to solve this problem, because European capital markets need to be unified so that European corporations as well as sovereigns can all borrow at pretty close to the same rates.
Yeah.
Right. So you have a unified. So this lowering rates, no, you better get to work on the capital markets union and how you're going to resolve ending the PPP and everything else that comes with it. So, I'm glad to hear you talk about that. But that then brings us to the US, right? And I'm going to throw this down because it's interesting that Jan Hatzius went there, but I had talked to some people right after I listened to Powell testify. When was that? Last week? It's almost 2 weeks now. When Powell testified to Congress, I thought he was pretty dovish in a lot of ways. And I said, interesting. I said, I'm looking for a July cut of 50 basis points. And I'm going to tell you why. And if I was Jerome Powell, I would, let's pretend. So I'm pretending I'm Jerome Powell. There's no question that the employment data in the US is softening. The JOLTS has been under, it needs to be questioned anyway, because in the electronic jobs billboard world, the JOLTS were never good. And there was some studies, I could tell you the name of them because I keep them handy. There was a study by Rebecca Knight and Juliana Kaplan covering how defective JOLTS was a couple of years ago. And I think that's been right, because jobs listed on boards become stale because it's in the interest of the people posting the jobs to leave them up there, because it's not about jobs per se, it's about eyeball hits, because that's how you're getting paid. So, and we've seen the JOLTS even in that realm turn down fairly dramatically. Now, it's interesting that Claudia Sahm, who was one of the lead economic researchers at the Fed, who came up with the Sahm rule, which talks about once unemployment gets 0.6% off its lows, that you've already started down towards a recession. Now that's, is it a hard and fast rule? There are no hard and fast rule in economics, except I would say Ricardian equivalence, but Daniel and I would probably argue about that. But it's, it certainly has some validity as she has tested it. So we're now 0.7% off, and I would argue that the last jobs numbers were probably padded a little bit, so the number may jump to 4.2, 4.3. If that's the case, and I was Powell, with knowing this and with having 4 labor economists as governors on the board who have to be itching here a little bit. And Austin Goolsbee, by the way, has become very, very dovish and outspoken, a cut sooner rather than later. Now, Jerome Powell has worked hard at maintaining consensus, and he'll probably do the same. But here's why I would go. I don't care what anybody says about the politics. The Feds, it's just, I've been doing this a long time. Daniel was nice to me and said I'm looking young, but I've been trading 47 years. Oh my God. I'm older than I think. So, but I've been studying this for 50 years and different facets of it. And the Fed just doesn't, that's too political a thing to cut in September. It's just too political. Whether it's real or not, unless you have a crisis, an emergency, I just don't see it happening. So do it now. It'll be out of the way, and get the 50 basis points and sell it like this. It's pretty easy sell. It's an insurance policy against the downturn of in employment, and we want to get out ahead of it. And rather than appearing political, and here's why we think we can do it. And it's interesting because John Williams and Chris Waller were both out talking about this, and Goolsbee's talking about it in the same way too. The real yield in the US is up to historic highs and I'm using either overnight or 3-month money, right, to inflation. And I can only use the inflation numbers that the Fed's giving me. I'm not going to conspiracy. So let's say the inflation numbers are 2.8 to 3%. And they've been there for a little bit. And overnight rates are 5.3. An effective real yield is 2.3. Now we can argue all we want about R-star, and I read the paper that Isabel Schneibel wrote about R-star, and she was very critical of it, calling it a theoretical construct, a theoretical element, and nothing more than that. So there's room. So with real yields that high, if I'm Jerome Powell, I say, I'm going to cut, we cut 50% because 50 basis points because we have room on a real yield basis. And we're just taking out an insurance policy. And now we're getting out of the way, and there will be no more cuts until December post-election, unless there's some type of emergency. But that's all we've done. So I'll shut up from there, but that would be my view on it.
I don't think that there will be a cut in September. I agree that it would be viewed as too political and unnecessary, considering that at the same time the second quarter figures are likely to be relatively okay. You know, we all agree that the job market is slowing down. Unemployment rate is at 3-year highs, but that is obviously something that is not going to drive people to be exceedingly negative, because it is still a very low level of unemployment. No, so I think that it's more likely for them, or at least it would be more logical to wait until December after the elections, because by then as well, they could also prove that the disinflationary pressures are more realistic. No. But it's a big challenge. It's a big challenge because one of the problems is that central banks are always deemed to be independent, but they're not independent. They're not independent from a market that is demanding rate cuts, that if there's no tomorrow, and from a government that is going to end the year with a 2 trillion deficit, according to the Congressional Budget Office. So a pretty big challenge. But I would say that the most likely scenario is to wait until December.
Yeah, that's some interesting analysis. What about in Japan? So if we look at a potential big risk to global financial markets being the Japanese yen, a lot of observers have remarked on how very undervalued it is. Do you see, Daniel, a potential revaluation higher? And if so, within what time frame and under what conditions?
Yeah, I've never understood the concept of undervaluation of currencies that people use. And I always use the following comment: be my guest and receive your salary in that currency if you think it is undervalued. Um, it's a very strange way of looking at what makes money, no? The problem of Japan is very simple. Japan decided to go down the rabbit hole of ultra Keynesian policies under the premise that it would generate no inflation whatsoever. Inflation finally appeared, even though it's very, very moderated, but it's still, I mean, for a country with aging and declining population, the level of inflation in Japan is pretty high. Yeah? And I always remember my first trip to Japan. I met the fund manager of one of the large pension funds and asked him about the risk, the problem of deflation in Japan. No, and the guy, very, very, very funny guy, said to me, "You don't live in Japan, do you?" Huh?
Okay.
You obviously
Yeah.
are not trying to purchase a home in Tokyo and purchase groceries in Tokyo. However, I don't think that there is a risk to the global financial system because of Japan. I think that Japan basically is showing you that you cannot go forever under the premise that printing money and increasing government spending is going to have no impact on the currency. The Bank of Japan has intervened. It has made the yen go up a little bit, but it's going to come down again. It's going to come down again. It's the forces of nature are still the same. What drove the yen lower, which is the insane level of deficit spending and a level of government debt that is not enough to cover the inflationary pressures, is basically what in Greece manifests through a debt crisis, in Japan manifests through the destruction of a currency. But I don't see it becoming a big threat for the world.
I think
I think
that's
I
interesting.
think it's very
Yeah.
different.
Great points. And your thoughts, Ira, on that for
Well,
Japanese
Daniel and I
yen?
will disagree, not on the rudiment of the currency itself and the value. But
Yeah.
I'm one who thinks that, because the Japanese have historically used a weak currency in order to displace other manufacturers, as they were displaced, by the way, because as they talked about, and especially in 2000, in the aughts, and until Abe came in and with the three arrows, the overly strong currency howled out Japanese industry. I mean, you had massive movements of industry, as Louis Gavay especially has written, of movements of out of Japan into surrounding Asian, but certainly China. I mean, massive amounts, even into the United States, with the overly, now the yen is, people forget the yen has depreciated 55% since March of 2020. And I use that date because the bottoming action of financial assets, I think, in the COVID time, I mean, we had some sell-off, but that was certainly when Italy closed it and everybody else followed suit. So that became, but the yen, now, from a fundamental, if you use the rubric of carry trade, it's done exactly what it's supposed to do. And people who partake in it have taken Japanese pension funds, everybody who's been investing around the world, sending money out of Japan, have done very well. Very well. Now, but as my, Daniel, you don't know this, but my son writes a blog. He's a political analyst on Japan, called Observing Japan. And now he's out on his own, but he's been talking about this a little bit, and it makes my ears perk up. And as you say, from a global perspective, who cares? The Europeans should care, because when I look at the euro yen, it's tough for the Germans to compete, especially in the U.S. domestic market, against the Japanese in the luxury end. I always look at it, Mercedes, but that's just an ancillary part of the conversation. But within the politics of Japan, the weak yen is beginning to become a political issue.
Yeah.
Because Japanese consumers, as Daniel talks about, the small and medium enterprises, not the big corporations who are benefiting, but the small and medium enterprises and Japanese consumers are paying higher prices because Japan is historically, they're not endowed with great natural resources, which is why, going back to the nuclear reactors, they're busy turning on their nuclear reactors slowly and slowly and slowly because it'll save them an enormous amount of money. I mean, Fukushima was a terrible, terrible disaster, but they are turning on the nuclear reactors, which will cut their energy import costs dramatically. But the weak yen is having political ramifications. So how this will play out, that's what we'll see. So everybody's been talking about, and this is, Daniel, I'm putting on my trading hat. Nothing theoretical here. True trading hat. The yen has gotten interesting in the last 8 or 9 days, not because whether the BOJ has intervened or not, but unlike the intervention in late April and early May, this elevation, this rise in the level, although not huge, is holding regardless of the intervention. So that is now, so now you're getting people who are short the Japanese yen, which has been a great trade. You can't argue with it. And it has done the bidding of a lot of people in the world. First of all, there are those like Louis Gavay, who I keep bringing him up because he's been right on this, of reshoring from China back to Japan, right? We know that they've been reshoring chip industries and other types of industries because, and the yen, the cheap yen is an attraction. But interestingly, the yuan against the yen is, the yuan is historically strong, but it's been holding in a range for quite a while. So the Chinese are very aware of the importance of the weak yen. Where this will go, I don't know, but the politics in Japan itself deserve to be watching it because, yes, people say, well, you can't strengthen your currency. I would beg to differ because I lived through the Plaza Accord, and you can turn a currency, especially if the underlying fundamentals per se aren't as weak as some people perceive. The greatest weakness is the carry trade. Global finance is driving the weak yen, and the Japanese haven't been opposed to it.
Yeah.
But if those positions start to turn because people get a little bit more nervous, and let's face it, it's not as cheap to be short the yen, especially, I would argue that if I was looking to use a carry trade, a currency, I'd be selling the Swiss franc because the Swiss would also like to keep their currency weak, as we saw the recent numbers out of the Swiss luxury watch industry were terrible. So the Swiss are having some problems themselves, and the Swiss is at historic highs versus the yen, all-time highs. So there are various ways to play this. My radar is up. Am I telling you to go run and do this trade? Absolutely not, because Daniel makes great points. It's not having, nobody really cares about it except people in the world of finance. So it's just worth watching. And
I think you make very good points. I think that ultimately what I'm trying to say is from the perspective of the way that fiat currencies work, the yen may start to strengthen relative to other currencies because the other currencies weaken faster.
yes.
Yeah. So ultimately, the yen is a safe haven because not because it's not because it's the handsome prince in the ballroom, but because it is the least ugly, no, or one of the least ugly, like the US dollar. So that actually I completely understand why it can happen. I think that the problem now is, I think that there's a new problem for the BOJ, which is what kind of inflation is going to maintain demand for Japanese bonds at the pace that they issue them, no?
Yep.
And that's a very challenging question because obviously nobody probably has the answer. We need to look at the market. But I think it's in 2025 that the Japanese government will spend 30% of its budget on interest expenses, despite exceedingly low levels of borrowing costs. No, so
Wow.
it's a challenge. It is
Yeah.
a very big challenge. But if everybody else gets uglier, definitely the yen will strengthen in relative terms.
You know what? So let me just close. Recently, when Kishida was coming back from the meetings in Washington, he stopped in Berlin
Yeah.
and talked about the yen with Lindner and Scholz. So there is evidently a little bit of concern that maybe on a relative basis the yen might have gone too far. And that doesn't mean that they're going to come in and bombard it. And your point is very, very well taken. And the Japanese should be a lesson to the United States and to France, as you rightly pointed out, and Italy, that deficits do matter.
Yeah.
And financing deficits do matter. And it may not matter today, it may not matter tomorrow, but they do matter. And as you have talked about within Europe itself, when Greece finally had to get its house in order, how did it do it? How did Spain do it? It had to endure a primary budget surplus.
Yeah.
Think about that. The United States is incapable of enduring a primary budget surplus. I don't know much in this world, but I know that. Not possible. Not possible.
Okay.
Cannot do it.
Yeah. And just a final question, given this landscape of monetary policies, environment of fiscal policies, and the geopolitical risk, what are your thoughts, Daniel, on investment ideas or generic investment asset classes that make sense?
I'm very boring. I think you need to continue to have gold to offset the unprecedented level of monetary expansion that will inevitably follow the unprecedented level of fiscal irresponsibility that we're living right now. After 72 countries have decided to have elections, and all of them in a period of elections spend like drunken sailors, afterwards, you're going to have monetary destruction. So I think you need to have gold. In relative terms, the dollar, I think, will continue to be stronger than most traded currencies, particularly the euro. I think that the euro is in a tough spot right now, considering the challenges both on the fiscal and on the political front. I think you need to be in equities. I think I'm banging on the table that you need to be away from European equities and in US equities, because it doesn't matter who wins. It doesn't matter who wins in the elections. The United States is going to come out on top of whatever happens in the next 2 years in Europe and in global equities, the MSCI World. If you strip the challenges of China, which will take some time to solve, but it's creating a value opportunity that you need to wait for. But continue to look at Asia, at Asian countries, at there's still tremendous opportunities there. So equities, dollar and gold, and try to avoid in general, because I think that persistent inflation is likely to continue to be a problem, continue to avoid sovereign bond indices.
Great, interesting. And your thoughts, Ira, on that?
Well, you know what? I'm paring back a little bit in the equity markets, although, again, I'm looking for best value. And that's not, I'm not talking about Warren Buffett type value plays. I'm looking for industries and businesses that I think in this global environment will do well. So again, I'm still looking at ag. I think mining, especially the gold, we've talked about the gold and Druckenmiller certainly put back on the table almost on the lows on Newmont. But the gold miners per se have been terrible investments, while gold has been a very good investment. And I know Daniel and I talked about this the last time we were on together, with going back to real yields or R-star or whatever function we want to call it. The fact that gold has performed so well in this environment, even if it was down $100 in the last, it doesn't matter. It's held up in an arena with a fundamental that would usually drag it down dramatically. So something else is up in the world. And when things change, when long-held correlation and fundamentals start to break down, you have to pay attention to them. That doesn't make me a wild gold bug, just buy gold. No, I'm careful because, again, I know the role of real yields. And when real yields are positive, and the gold is going up, something bigger is afoot. There are bigger movements, and it may be. And I know Daniel is one also. Debt, and even as Powell warns about, it's the growth in the deficit that is to be very concerning, because the cost of financing it is going to be a political, and how this isn't on the front burner. I don't care who's running, whether it was, Biden against Trump or whoever. It doesn't matter. How this isn't on the front burner boggles my mind. Even in France, where they can't get anything right, and I see the disgust in Daniel with the French, and Macron and his arrogance. He rolled the dice and took out a gamble, and I think he did it very calculatingly, because we've seen that before. I come out of the political left, and I'm not quite that old, but in the 60s, there were people in California who sponsored Ronald Reagan from the left, because they were hoping that Reagan would get elected governor in California and things would get so bad the revolution would come faster.
Yeah,
and yes,
there you go.
Right? That's what they thought.
Right.
It's such a cynical view, but that's what they thought. And they promoted that. When I was probably in my teens reading about it, and I go, wow, that's a rough road to go. And Macron rolled the dice here. Now, he may have come out on top for the moment, by the way, except that I'm with Daniel. Let's see what happens with the French debt versus Germans have already, since Macron did this. At one time, the French rates went up 40 basis points on their long end. That's not insignificant, by the way. Now they've contracted a little bit, but they're still elevated from when his cynical move to dissolve Parliament. And everybody, I hear people talk about explaining the French system. They don't understand shit about the French political system. Everybody, they turn on. You have to understand and have read the Fifth Republic and understood the fall of the Fourth. It's a complicated system. And as I tongue in cheek, and I'll make Daniel laugh, that Macron, who thinks he's the heir to de Gaulle, but I've right?
I was gonna say that.
He is the heir to de Gaulle, but that's only because he sleeps with de Gaulle's mistress. Oh, wait.
Oh, God. Okay.
I have to get that in there because certain things are just too much fun to play with.
That's hilarious. That's hilarious. But it is true. That it is true that you know very well, the people that are watching us or hearing should know that the French electoral system is so convoluted because it was created in order to make de Gaulle win no matter what. If he wasn't, or if he didn't have majority in parliament, he would be president. If he had majority in parliament, it would always be. The problem is that de Gaulle is gone. Excellent, thank you.
It's been a great, insightful discussion. Sorry, Ira, did you want to mention one more?
No. This was
okay.
This is great. I know. One time we just have to spend a whole thing on Europe because I like Daniel and I worry about the European bond because the politics in Germany are such, and we didn't get into it, but the politics in Germany are such that if you get a rise more of the right, and I don't mean that in any kind of nefarious, but if the stuff, meaning the whole criterion of the EU, if it starts going back to Karlsruhe and the German Constitutional Court, and the rug starts being pulled out from it, you are going to have an implosion of the European debt market, which will be disastrous for the entire world.
Yeah, absolutely agree.
That's why they have to get that capital markets union. And if they get the capital markets union, then I'm going to ask Daniel, and then we'll come back and we'll talk about does that change his perspective on Europe?
Okay, great. Yeah.
Just coming to an end quickly here. If you can let our listeners and readers know, Daniel, how can they learn more? You have a podcast program also.
Yeah, you can follow me on YouTube and podcast. I have a special channel in English. Also, my website, daniellaccalle.com/en. It's not difficult to find me. I always say that it is easier to find me than to avoid me. So just
Okay.
key in
Yeah.
Daniel Lacalle and I jump up.
Great. Awesome. And Ira?
I'm just doing the podcast with you, Richard, which I look forward to, a few other places.
Great.
I try to, I'm going to try to start writing more because I'm still, again, doing the work. And I follow Daniel's stuff. That's to demean it. It's not. He's one of the best out there. I have 6 or 7 go-to people every day that I like to peer into and see. Now, Daniel doesn't always write every day, but I'll find him because the people who I respect most are picking him up anyway, from Luke Roman to Lewis out in Asia. It's not an echo chamber because we don't always agree, but we will discern and discuss. And that's the most important part, to try to generate the most profitable investment ideas that we can.
Yes. Great. Thank you so much, Daniel and Ira. Thank you.
Thank you.
An absolute pleasure as always, Ira. It's been
Thank you, Daniel. It was absolutely a great pleasure. Really appreciate
Have a
you.
good day.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.